Hello, hello. Smooth. Isn't that really smooth, guys? Don't fall asleep on me now. All right. Good evening and welcome, everybody. Happy Monday. Good to be with you today. I'm excited to be in this conversation with you on a Monday night. Let's go. So, welcome wherever you are. I want to welcome you, my YouTube peoples. Welcome. Happy Monday. My people on the call with me in Zoom. Welcome. Happy Monday. Let's get into it, guys. Bear with me really quickly. Some logistical things I want to handle. Make sure I got my peoples in with me today. Let's go. Welcome, everybody. Good to be with you. And let's go. All right. Just getting this live started, guys. Make sure everybody's on the call. Let's go. Let's get started. Guys, this is me, Cheston Bulgin with By the Books Consulting, CFO tax strategist, your accounting superhero. You can reach us at 888-4BTB. Now that's 888-428-2669. Or you can reach us on the web at youraccountingsuperhero.com. You can reach me, C. Bulgin, at youraccountingsuperhero.com. Or you can follow me. Make sure you do that. Follow me on Instagram at youraccountingsuperhero for direct access. And just to be clear, guys, we get to have conversations like this about how you can go to the next level in what you're up to in trucking and business and life and everything else when it comes to accounting, tax strategy, business and tax planning and business advisory. These are the things that we help you out with, technology that goes with running your business. And, I'm super excited to be with you in these conversations because we get to do something that we call fulfill on an intention, which is make the difference for you and what you're up to. And I always get fired up about that, guys. So that's what we do. And a quick disclaimer before we get started, the following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. Now, guys, I want to be with you here today. I'm actually going to sit out. We're going to be with you today, all right? Sit out, be with you today. And we're going to talk about what we've been talking about for the last few weeks, rather. We've been talking about what I call the fundamental five, with really how you move money throughout your business and how to set targets, how to be efficient and effective when it comes to growing your business, having more cash flow, just by understanding these concepts and choosing accordingly because you have a new understanding of it at a higher level, you can choose to win big time inside of what you're doing in your trucking business. Pretty fantastic stuff. We talked about assets and liabilities the previous weeks that we've been in this conversation. Today, we get to have an elevated conversation about equity. Man, I love equity conversations. Why? Because equity equals wealth in your business. Equity equals wealth in your business. But how can you use this in a way to set targets? How can you use this in a way to move your business forward? Why do you want to know this inside of what you're up to in trucking? How do you know like what's really good here when it comes to this thing called equity today? All right, so we're going to get into this conversation right now. I want to get with this right now. And really, there's something that I want to deliver with you today in this conversation for those of you who are, man, I want to acknowledge you guys for showing up tonight. Those of you who are in the room, those of you who are actually on the call with me, because it speaks volumes to who you are as an individual to come in here and learn some things that'll help you be that much sharper inside of your business so you can get those next level results and have that without question. See, life doesn't have to be a mystery. If we get into the understanding of what it is that we can hone in on newly, that would move our business forward newly, then you can have those results with a high degree of certainty. So I want to acknowledge you for being here in this conversation, for getting access to that type of information. So what we're going to talk about here, and I promise you that you're not going to waste a moment of time being here in this call. Okay, we're going to always deliver what it is that you can do, what you can take action on in order to elevate your profitability in your business, increase your cash flow in your business, increase your peace of mind when it comes to running your business. Okay, these are the things that we really get into on these calls. And by the way, guys, at the end of this call, I do want to offer you an opportunity to hop on a session with me or a member of my team. That's one of the things I want to do. I didn't do that last week. I just want to clear that up because I said I would do that last week, and I didn't do that. So I'm going to offer that to you again. Some of you guys missed out on having that opportunity, and we're going to make sure you have that opportunity today. Okay, so at the end of this call, I'm actually setting myself a reminder right now to ensure that before we get off this line, I will set you up to get on a call, get access on a strategy session, tax strategy session with me personally. Okay, with me personally. I won't even let anybody else take you. I'll take you myself. Okay. So that's what I'm going to do with you today. And I'm just setting myself a reminder to do that, guys. Awesome. And now my reminder is going off right now. It's set for right now for me to go ahead and issue that link for you before we get off the call. And the thing that we're going to get to today inside of our conversation is the critical aspect of equity in trucking finance. Like it's part of a broader concept known as what we talked about as the fundamental five, which is assets, liabilities, equity, income, and expenses. If we think about that, these five things, money does not flow, value does not flow outside of these fundamental five. So if you can understand money flow in terms of these five things inside of your business, well, it gives you a great degree of clarity, focus, and understanding so that you can make sound decisions when it comes to business. And, for me, by the way, this access really changed the game for me because what happened was that I was able to start setting goals in business and targets in business. And because I was able to set those inside of that framework, it was like, man, this actually delivered what I was expecting to deliver. I created a goal, a target. We started hitting those targets just because we understood what we were doing and we had a direction to go inside of. And I want that same feeling. Really, it's a relief type feeling that you can actually accomplish specific things inside of your business. You don't have to spin your wheels or be shooting in the dark when it comes to results. You can have things that you can go for specifically and achieve those outcomes, crush it, and move on to the next thing, and then to the next thing, and to the next thing, and to the next thing. And that's why you're here, so that you can have those next level results, no matter where you are, like whether you just getting started or whether you've been in the business for a while, industry for a while, you're generating tens of millions of dollars a year. You can always get to that new level inside of where you are. Okay. And this gives you an access. Trust me, guys, I've been in conversations with people who've had trucking companies and they've been doing well, per se, well in terms of revenue and everything, but there's still headaches and there's still opportunities to grow beyond where they are to go past the stuck point, whether it's in systematic processes or whether it's in being able to increase profitability, whether it's being able to lower taxes, whether it's being able to increase cash flow so they're not scrambling to make sure payroll is being handled. There are always going to be things that you and I can look into, specifically inside of this framework of this fundamental five that are going to deliver you with certainty. Well, a high degree of certainty. It can't be 100%, guys. It's never going to be 100%. And it can be a high probability. I'm talking about 85% or higher that you have specific outcomes that you can reach by just understanding these principles. That's what I want to say. So be here in the conversation with me to get that access so that you can have that degree of certainty in what you're doing. Okay. Now, fundamental five, assets, liabilities, equity, income, and expenses. This is what we're talking about. Right now, we're talking about equity specifically. So we're going to recognize how equity operates and can transform your approach to your business decisions in trucking. And so that's what we're going to do tonight. And get this, okay? So here's the objective. I want to clarify what equity is because some of us understand or hear this terminology. We get like if you have equity in your properties, like it's a good thing if you have a good amount of equity in like your real estate and you could pull that equity out and like in terms of cash, like refinance, like maybe a piece of a piece of real estate and you can get cash out of this real estate. So that's equity, right? It's not necessarily just limited to that scope. Equity is a concept. We can translate this terminology into net worth. We're going to talk about what this really is in a few seconds. But I want you to really get how equity, you can use it to make sound decisions and set yourself up to understand key performance indicators inside of what you do in your business. Okay. So that's what this is about. These are the objectives of this conversation tonight. So you can have actionable knowledge to enhance your business strategies. Okay. So I'm not going to go into this per se, the introduction to the fundamental five, because we've done this already. Okay. And we talked about it even tonight to a degree. But what I really want to get into, besides the recap, I want to get into equity itself. Okay. I want to get into what it is, what's the definition of equity? Why do you even care? Why would it be something that you even want to consider like knowledge wise? Why do you want to have this in your knowledge repertoire as a company, as a trucking company, right? And some of you guys are listening to me driving the truck and you're just thinking about, man, I just need to make it on time to my next load and make sure I have something set up as a backhaul. And so do my drivers too, But all and out of all the things that you put on into your mind, why would you want to actually put something like this into your mind? So let's understand what equity is for the first part of this, okay? It is the portion of a company's assets that the owners claim after all liabilities have been settled, okay? In trucking, it signifies the financial stake in the business that can increase with profitability and asset appreciation. All right, so yeah, let's put this down in layman's terms, okay? So if we think about what equity is really, equity is how much value do you actually have in something? It would be good to go into life and create what we call a net worth for yourself, positive net worth for yourself intentionally. But what does that look like on a day-to-day basis? And a lot of times we'll go through life and we'll accumulate liabilities, we'll accumulate debt, okay? So there's a feeling of stress that surrounds that pressure of being in debt, always having to pay these obligations to other people. It seems as though you continue to work. It could seem like this, like you're continuing to work just to pay other people, okay? But what's left over for you? And this is a cycle, like this whole debt cycle that I'm talking about here. And living this way is what a lot of us do in this country, living inside of a debt cycle, in the planet, really, in the world, not just in this country, but all in the world, period. When we live inside of this debt cycle, it is a life-consuming process that in this cycle, it almost is inescapable if we don't intentionally create something new. So if you're really good, like sound, at managing finances, this aspect of your life we call finances, then you're going to be doing specific things to increase your worth. Okay. And you'll not only increase that worth, but at the same time, protect it. If you are intentionally creating financial mastery for your life, okay, this is what the idea is, the concept is. So if I go out and man, like take a credit card debt, for example. If I go out and use my credit cards to purchase inside a business now, I use my credit cards to go out and purchase things like office supplies and maybe even fund payroll in order to have, some type of short-term cash flow situation. Well, I take money from another person, another entity, another business, use that in my business, and now I have this big, huge lion share of a debt. It could be huge, it could be small, it could be somewhere in between. But anyway, I have something that's a debt that constantly sits there. And if I don't have enough sitting there in terms of like value, like if I didn't have more cash, for example, than the debt is concerned, then that's going to eat away at me for a long time because not only do I have to, pay for the expenses that I paid, you know, I have to continue to pay for those operating expenses like, payroll and office expenses and maybe utilities and operating costs. I would continue to pay on those. But I've just now added this obligation to pay this other entity back with interest. And if you had a cash flow situation where you could not necessarily afford to pay those expenses, which was the main reason, if you took that as the main reason that you were borrowing the funds, well, then you're going to set yourself up in a cycle where you're continually not going to be able to build. All right, you're not going to be able to build any type of difference in value and worth for yourself. Okay, so the important thing that we want to get inside of my communication is that if you don't intentionally create a pathway to have more value inside of what you do in your business, then it's not going to happen automatically. It's not. So one of the things that you and I get to do is to create intentions, create goals in terms of increase my net worth in business. In other words, equity. How much of this money how much of what's in my business is mine completely without any debt attached? How much of this do we actually own without any financial obligations to others? Is my cash like that I have in my bank tied up to something else debt-wise in the future that I have to pay, or is it free and clear? And is it mine altogether? Okay. Now, I don't want to keep bashing what debt is because debt can be a really great financial tool. We talked about that a little bit last week about how liabilities and debt can be a great tool, a great asset to us when it comes to managing a business and increasing worth too, right? Because we can leverage debt to grow asset bases fast and increase wealth fast. Okay. At the same time, we want to be mindful of how much of this asset base inside of my company, how much of these trucks, maybe if you're a trucking company, how much of my cash, if I'm any business, how much of this land that I own is actually mine without any obligation to it, without any stress to pay? Wouldn't it be great to have ownership free and clear of things, right? There is a feeling associated with that you can actually get present to right now. That relief, that peace of mind that you don't have anything attached to what you have. You own it all. Okay. Well, the goal is to move toward a realm in which you have that constantly inside of life. Okay. That feeling is okay, you're healthy when it comes to ownership. Even if you have a debt attached to things in business, if you decided to, you could just pay off the debt and own things free and clear. Right? This is a healthy financial position. All right. And this is by definition, we want to get access to what equity is. It's how much I actually own without any financial ties in terms of debt. Okay. We can look at it like that specifically. So if I were to open a business up and the business has, we call assets. We talked about current assets and fixed assets. We talked about assets in a few calls ago. Okay. So one of those assets is really cash in the bank. If I have cash in the bank, and to run my business, I can look at, well, where did that cash come from? Now, a lot of times, if you get started in business, it's cash that you personally put into it. You took personal money and injected that into your business, and all of the money that's in the business is free and clear yours, right? It's 100% equity when we do that. That's what we call that. Okay. Now, if you go about and operate and generate a profit, well, that adds to your equity base. Okay. That is how that works. Now, if you take money out of the business, it detracts, it subtracts whatever equity is in that business. Okay. This is how it also works. If you take losses and profits, it will also diminish the amount of equity that you have in that business. Okay. This is how it also works. So to break it down, simply put, man, equity is how much you have in something. In the case of your business, equity is the amount that you personally have at stake in your business. All right. And hopefully that makes sense, guys. If that's starting to make sense to you, put a one in the chat for me if that's making sense. If you're starting to understand a little bit about what equity is, put a one in the chat for me. All right. This is important to understand because a lot of us will go around and borrow money just for the sake of borrowing money, but not really having being present to what the impact of that debt is having on your total financial position. So what do I mean? Is I mean that if you have more debt than you have equity in the business, calling it upside down, it's possible to be upside down. People do this. Well, then it's not a sign of you being healthy. It's really like I've said this in other calls. It's like you going to the doctor and your doctor saying, "Hey, look, man, your blood pressure is 200 over 100. That's not a good thing. We got to do something. Quit fasting in a hurry to make sure you're going to live." All right. So it's that situation financially is what you're putting yourself into when we take on excess debt in relation to equity. Okay. So we want to understand what a healthy business looks like. A healthy business looks like I have more equity than I have debt. Right. And this is really a healthy position. So if I were to take a KPI, for instance, and one of the key performance indicators that I want to get you present to is called debt to equity. How much debt do I have in relation to my equity? If it's more than one, then there are some adjustments. Really, I would say if it's more than zero point 0.5, there are some adjustments that want to be made and targets that want to be set for your business to be healthy. Now, some of you may say, like, man, I don't even know how I'm going to do that. How is it even possible for me to achieve that with us having so many other obligations that we have? Like, we have to pay our people. Money comes in, it's going out. We have to, breakdowns happen all the time with equipment. We never know when that's going to happen. And we're spending a whole lot of money just to operate. So, where am I going to find the time or the resources, rather, to go ahead and get in my financial position, this key performance indicator, to, you know, um, greater than one? Okay, greater than one. Well, if we actually create it so that we set the intention and to put our attention on it, trust me, you will find something like inversion in means of a way, right? You'll find a way to move that forward. I just put, what did I do, Ben? I put $28 in a savings account today. Or was it yesterday? It was yesterday or today. I put $28 in a savings account. Why? Because it's a matter of habit. Whatever is there, it's like, okay, I saw this amount of money come in. So what is the proportion that I want to put in savings? Okay, I'll put $28 in there. You know, and it can be just like that. It doesn't have to be something where, it's like, I don't know what I'm going to do here. You can set yourself up to move it forward in some way, form, or fashion to ensure that your business financial health, which would be the substantial um, aspect of what provides for your life personally, right? The financial health of your business equals the financial health of you personally, and in most cases, right? So if you take that by the horns, you actually steer that ship rather in the direction where it's going to be healthy. Well, then you just create something new to where you can always have healthy finances in life. Okay. And it's just choosing this is what I want to say. You get to choose it. You get to choose it. You get to choose it. Right. So awesome. Yeah, look, we got some people saying, yeah, you're getting it. You're getting what equity is. All right. So let's talk more about it. And let's talk more about what kind of difference this can make. Here's the importance of equity in trucking. Understanding equity is vital for trucking businesses as it affects decision making, investment potential, and financial stability. Solid equity base can enhance credit worthiness and attract more financing options. So some of us are in positions where we don't know why we can't really get ahead with things inside of business. Like you're always getting like the worst terms in financing, or you're always like trying to get financing and not getting quite the terms that you want to get on the financing that you're getting. And there is a fundamental reason for that. It's because when you submit a balance sheet, your financiers, your lenders, you're looking at certain things. Like if I were looking at a balance sheet, first thing I'm looking at is, okay, well, how much do they have in this business, right? Are they over leveraged here? If they're over leveraged, well, that's a high risk for me. And if it's a high risk for me, then I'm going to pass. Okay, I'm going to pass. And this is how your lenders will process it. And without intentionally going and creating what good looks like in your finances in this area when it comes to equity, you're not going to set yourself up to win. That's just what's so. Okay, you're not going to set yourself up to win. So the thing that what do we get to do here? The thing that we get to do here is continually create it so that we're positioning ourselves to have equity health, like a financial statement that shows positive equity in the business, a really good substantial amount of health in the business when it comes to equity, so that you have so many options to choose from that you don't have to just settle for anything when it comes to debt, like when you take on financing, when you decide to do that. Okay. So what are some ways to increase equity in your business? Let's see if you guys have an idea what ways are there to increase your equity in your business. If you're going to create healthy finances in your business when it comes to equity, how would you approach that? What would you actually do? That would be my question to you. What would you do to create equity, health in your business? So while I want you guys to respond in the chat, and those of you who are here on the call, definitely take the time to put it in the chat. What do you think? What do you think is the actual a thing that you can do to improve equity in your business? Okay. Now, while you're doing that, there are a few other ratios that you want to consider here, like ROE. All right. ROE. You might want to write that down. ROE, return on equity. So what is return on equity? It means, well, I have this amount of equity in my business, and then based on this equity I have in my business went out and generated this much profit with the amount of equity I have in the business. So how have I been deploying that equity in my business? Right? How have I been efficiently managing the equity in my business? So return on equity basically means that, for the profits that I have, what's the ratio of that profit that I have in terms of how much equity I have in the business? So for example, let's say that you have $100,000 of equity in your business. Let's say that you have $100,000 of equity in your business. And then you went out this year in 2025 and you generated $10,000 of net profits. Like what? I did all this for 10,000 of net profits? Right? Let's say you go ahead and do that. And that means that you had a 10% ROE, return on equity, 10% return on equity. Okay. So really, if what good looks like, and now if I'm looking at a business and analyzing how healthy that business is, I would like to see at least 20% return on equity. Okay. I know that they're not ill. That business is not definitely ill when I see a 20% return on equity. And the higher that number, the more healthy the business. Okay. It means that they're managing the business so efficiently that they're turning out profits with all the resources that they have at their disposal. Because if I think about equity, it just translates into how much assets that I have in it personally, like how much asset base I have in it personally, like how much money I have in it personally. So if I go out there and I'm actually returning that on the money that I have in it, I'm like, man, I'm getting like a 20% return on that money that I have in my business, or that value that I have in my business. That's very, very good. Okay. And it's very healthy, is what I want to say. Now, it is a great target there. It's not the same as having an ROI. not necessarily. Because if we think about ROIs, like return on investment is what that is, ROI, return on investment. If I go out and invest in stocks, well, if I get like 8%, then I'm doing really well in return on investment in stock investments. This is not really the same analytics that we're doing here when it comes to return on equity, right? Because there's a lot of energy, a lot of resource, a lot of time, a lot of effort that I put into it. So I want to make sure I'm not just getting the return based on the amount of asset base I have in it. I'm getting a return on how much effort and energy and direction of resources I've allocated to this particular thing. Okay. Even if I'm not working in the business myself, there are a whole lot of resources that have been deployed in order to produce this. And for that, those resources, what is the outcome in terms of what we're getting back for those resources deployed? All right. Now I can take that and look at that and say, okay, yeah, if I'm doing 20% or more, then it's fantastic. Okay. If I'm doing less than that, well, how do I get it up to above 20%? Another KPI. So let me see what the responses are to that. How would you improve equity? All right. How would you improve equity in your business? It's like crickets, guys. It's like, I don't know how to do that. I don't know how to improve equity in my business. There are ways to increase equity, okay? There's different ways to increase equity. The main way to increase equity, that was why we get into business in the first place, is to increase your profitability, okay? Increase your profitability. That's number one. The number one way to improve the amount of equity you have in your business is to increase profitability. All right, guys, I'm gonna take a pause right here before we wrap up this call. And I want to go ahead and put this link in the chat. All right, I'm gonna put this link in the chat on YouTube for our talk here. Those of you who are in the call tonight, you get an opportunity to get on a tax strategy session. All right, tax strategy session. Let's go. So we're going to do that. Make sure we get in. It's tax time, guys. It's tax season. So I want to give you an opportunity to make sure you're set up to win when it comes to tax season. And my alarm went off, my structure went off. So I'm going to honor that promise today. All right. That's what I get to do. And let's see, guys. So there you go for YouTube, my YouTube people. There you go. And then for my people who are in the Zoom call, here you go. Awesome. All right, that's done. That's complete. So guys, make sure you take advantage of that link. All right, if you're on the call, tax time, you get a tax strategy session. Hey man, people spend like tens of thousands, if not hundreds of thousands more than what they need to in taxes. Get on the line with me. Personally, I'm not going to say me or my team. It's going to be with me. Okay, you get on the line with me and we go over your situation and we make sure that you are good when it comes to taxes. That's what we're going to do there with that link. So because you're here, you get access to that. All right, fantastic. Now, back to closing up this conversation, one of the main ways, like I said, is to increase your equity, is to increase your profitability. All right. So you can increase, how do we increase profitability? You go out there and get more sales, get more revenue, drop more loads, build up relationships with more shippers, all right, and even more brokers, right, and make sure that you're getting more volume in. Maybe your truck is not performing at optimal capacity. When you want to get about 3 loads in a week, you're only getting like 2 loads in a week. All right, you can increase that. All right, that's one way to increase your profits. Cut costs, like stop spending money where you don't need to spend money. Okay, like in terms of like there's communication that you can have, guys, and train your people in order to make sure that there's less waste in the fleet. Okay. So there's opportunities to reduce that is what I want to say, and how you're efficient, like cutting out all the excess applications that you don't need, that you're not using, doing a review over time to see what's necessary, what's not necessary. Make sure you're optimizing staff, like how many people should you have to manage a fleet of 50? How many people do you need to manage a fleet of 50? Do you need extra staff to do this? Probably not, right? So making sure you're cutting back on some things that are not necessary. All right. And the next way that you can make sure that you're increasing equity is to manage the amount that you are taking out for personal use. So a lot of the companies that are here in this conversation, your S corps, your partnerships, your single member LLCs, sole proprietors, and of the like. So what that means is that the business income belongs to you personally. We call that a pass-through entity. So a lot of times you'll take draws from the business. Like people do this. They take owner draws, owner distributions, depending on the nature of your structure. Do you need to take that much in distributions? Do you need to take that much in owner draws? Can you create a budget for yourself to ensure that the company gets healthy first before you start dipping in that way, right? That's another way to increase equity inside of your business. Stop taking money out of it. Okay. And then also the third way to make sure the equities inside of your business is to go ahead and put more money, inject more money into it. We call this capitalization, man. So we live in a capitalistic society, and basically what that means is that businesses are attractive for investors. Okay, and they're attractive for investors, and investors can put money into the business, and you can be a number one investor in your business by putting money into that and injecting capital into it, which increases the equity of that business. Okay, so those are three ways that you can increase equity in terms of making sure that your business maintains a healthy financial position. Now, guess what? Have you been looking? Have you been have you been responsible for this inside of your business is the question. Have you been taking a look at your equity position to ensure that that is a strong KPI for you, a key performance indicator that represents strength inside of your business? Have you? And that's the question, right? So you get to go ahead and look, and if you're looking at that and you see that it's not where you want it to be, you have the option now to choose. So I invite you to choose and choose well for your business. It's been great to be in this conversation with you tonight. I'm hoping that you got some value tonight, understanding what this is for your business and what choices you have now. Go out there and deploy these KPIs. We got two KPIs, debt to equity and return on equity, that we talked about tonight. All right. How are you going to use those in order to make sure your business performs at its most optimal level? All right. Thank you for being in the conversation with me. It's always a pleasure, always a joy to be with you. My name is Justin Bolgen, CFO, tax strategist, your accounting superhero, and I will see you next week. Take care, guys. Have a great week until then. Bye-bye.